This is Trade Flow News.
Welcome back to Trade Flow TV. You know the drill. Markets move fast, and if you're not ahead, you're under. It is Thursday, August 27th, 2026. Yesterday, we warned you that the bearish tone in the energy market was a paper illusion. Yesterday's warning was just the start. The structural deficits we highlighted are now the market's primary driver. Masking structural physical deficits. This morning, the trap has officially sprung. The energy bears are scrambling. First, the commodities flash. EIA storage data printed a massive, unexpected drawdown across crude and distillate inventories. Brent crude violently reversed its multi-day slide, gapping up over 4% on the open to test $90.20 a barrel. Meanwhile, LME copper stocks have plunged below critical thresholds. Rumors of emergency position limits are hitting the tape. LME copper is testing $14,600 per ton. Industrial buyers are front-running the deficit, demanding physical delivery immediately. Overnight, a severe polar air mass hit Brazil's agricultural belt. Arabica coffee and raw sugar are locked limit up. Capital is seeking a safe haven in gold, pushing back above $4,730 ahead of tomorrow's crucial US PCE inflation data. Deep dive. You cannot trade a physical deficit with a paper algorithm. The EIA report was a brutal reality check. Macro algorithms sold crude based on diplomatic headlines, ignoring the physical logistics of the maritime wartime tax. If tankers take the long route around the Cape of Good Hope, onshore inventories will drain faster than paper can calculate. The 4% reversal in Brent is the sound of paper shorts getting liquidated. The physical floor is higher than expected. In copper, half of remaining stocks are marked for withdrawal. We are entering the sovereign intervention phase. If the LME delays deliveries to protect clearinghouses, industrial buyers will flood the OTC spot market, driving premiums parabolic. The Brazilian frost is a textbook black swan. It kills vegetative branches, ensuring a multi-year supply deficit. Consumer goods companies will see input costs explode, locking in structural retail inflation well into 2027. The market is entering a phase where physical possession is the only true hedge against paper volatility. The physical reset is violently reasserting control. The EIA report proves the maritime wartime tax is draining reserves. If LME restricts copper, maintain maximum exposure to frontline miners. The OTC premium will be the driver. Brazilian frost guarantees a margin crush for food brands. Head over to TradeFlow TV to stay ahead of macro reality. Stay liquid, stay sharp. Have a defensive Thursday, and we will see you tomorrow for the PCE release.
That is all for today's news on commodity markets. Stay tuned to Trade Flow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.